If you're someone who likes to use EMAs for trading, but still often gets stopped out or hit stop losses, or you run into problems like entering too early or getting trading signals that are too late, this is because many people still misunderstand that the first EMA cross is the best entry signal. In reality though, the golden opportunity actually lies in the second cross. I've discovered that every time the 3 EMAs cross for the second time after a price pullback, that's the golden opportunity that makes it easiest for the price to shoot up to the take profit. So today, I had ChatGPT help me write an indicator code. With a special condition, the indicator displays up and down arrows when the fast EMA crosses the middle line and aligns with the trend of the slow line. Then I tested it live on USDJPY on the 4-hour time frame, and the results were outstanding. It gained almost 500% in just 3 years. As always, you don't have to take my word for it, but trust the statistics. Let's take a look at the actual test statistics first, and then we'll dive deeper into the trading method. And if you enjoy videos like this, don't forget to subscribe, or you can get free techniques via Line at Chow and Trade School, which is now showing on your screen. Ready? Let's go! That concludes the full 3-year test from January 1st, 2022 up to now, which is the beginning of 2025. This was done on the USD-JPY pair 4-hour time frame using the Tickmill broker's chart G. Tickmill is a broker with an FCA license from the UK, which is a top-tier world-class Forex license. So for anyone looking for a broker with strong stability and a high-level license, plus very low spreads and commissions compared to other brokers operating in Thailand, you can check this on my textbook. Tickmill is the one. It's the best because I mainly use Tickmill as my broker. The equity curve has risen like this over the past 3 years. Now let's take a look at the statistical results inside. I used a risk per trade of 5% with a capital of $10,000 and an RR of 1.0.5 as before. The win rate came out to 64.91%. The P&L, or profit percentage, achieved a return as high as 420.7%. That means if you trade with a capital of $10,000 and use a risk per trade of 5%, you would get a return of $42,070. In total, there were 57 trades, 37 wins, and 24 losses. The profit factor here is also an important figure. Anything above 1.5 is considered good. But in this system, the second EMA crossover, or the second crossing of the EMA, the profit factor is at 2.77. That's quite a high profit factor. The maximum drawdown, which is also a crucial number, there is only 14.26%. So for anyone using this system over the past 3 years, I can assure you that it runs with extremely low risk, going well below 15%. Many of you might be wondering what trading methods or techniques are used. Let's take a look at how to set up the 3 EMA lines and dive deeper into the trading strategy. Let's continue with how to use the tools and set up our indicators today. So, as mentioned, we will be using a total of 3 EMA lines to observe the EMA crossover. Now, let's look at the settings. You have 2 options. You can use the EMA from TradingView or from any platform, really. Just add 3 EMA lines and set them as follows. The fastest line is 5, the next is 20, and the last one is 50. 5, 20, and 50, these represent the fast, medium, and slowest lines. Or as another option, you can have ChatGPT write a condition for you that displays an up or down arrow whenever a crossover, specifically a signal crossover, occurs. And if any of you want to get this Pine script directly, if you don't feel like making it yourself or chatting with ChatGPT, you can also request the ready-made script from me. The only condition is that you open an account with Ficknoo Broker, which has been the main sponsor of the Champ Trade channel for a very long time. Just open an account. Through the link below this video and deposit at least $200, then you'll receive this script right away. Just message me online at Trend Test School. So there are 2 options for you to choose from. Now let's move on to the 3 steps of trading. You can take short notes as we go. Step 1 is called the first EMA crossover. This is when the EMA lines cross. 5 crosses 20, crosses 50, like this. At the very first crossover, we won't do anything yet because our key strategy lies in the second crossover. The second crossover. Or what do you mean by the second crossover? It means that I'll wait for the yellow line to cross the white line at the first point, and then there's a cross up forming a kind of W shape like this. It crosses the white line. Similar to when the chart pulls back, the EMA dips down and then crosses back up, returning to the uptrend as before. Let's look at an example so you won't get confused here. This is what happens during the second EMA crossover. Can you see it? Notice how it forms a W shape dipping down like this. The first crossover happens, and then it crosses back up at the second point like this. When this occurs, there's a high chance that the upward momentum will be very strong. Got it? No one has ever told you this before, for sure. This is called the second step, or the second EMA crossover. It's the second time the lines cross. But the green line must still be holding the trend from below like this. See? It's still an uptrend scenario, just like before. It's not the yellow line crossing down to the third line or the MA 50, like. This doesn't count, okay? If you come across a situation like this, the arrow that I had Chat TV write will show up, indicating a cross up like this. So you can go ahead and trade Kile. Now, step 3 is about entering the order. This is the main topic for today. You enter at the closing price of the candlestick where the crossover happens. For the stop loss, set it at the last EMA line, which is the EMA 50. You don't need to remember too much. Just remember it's the farthest EMA line. The expectation is that after the cross forms a V shape, the price will move up. Make sure to manage your risk carefully and you can successfully close one position. Let's keep watching. It might cross again and form another V shape as well. Did you guys notice this part? Okay, after the first cross right here, the first cross creates a V shape right here. This is a V shape like this, 5 crossing 20, right? And then the cross goes up like this, which means there's a chance it will go higher. Remember this pattern, everyone. When you see this, you can place an order right away. Enter the order at the price where the alert arrow is pointing here. You make a profit here. This part is a sideways phase, so we just wait until the first cross happens again. After all the commotion here, it forms a V shape or a second cross right here. Then we simply enter another order. It's that easy. Here, this is a downtrend scenario. A first cross occurs in a downward direction. You can trade on the downside as well. Notice how the yellow line moves up like this. It could also form a V shape in a downward trend. Okay? If a downward V shape forms, we can trade in this situation as well. Okay, right here, you see a downward V shape, right? The first cross happened on the initial move up, correct? Then what could happen? It could cross back down here. This is the characteristic of a V shape, and there's a chance it will continue to drop. This is what's called a second cross because the first cross happened over here, around this area, where the 3 lines crossed in a downtrend, but we don't enter the trade just yet. We wait for the price to pull back. And then when the 5 crosses above the 20 and then crosses back down like this, that's when we sell right here. The point where the arrow appears is the most advantageous, right? Do you see the arrow here? If you want to use this method, you can use the indicator or you can access it through ChartPlay as well. Just open the link via FX Mile below. The minimum deposit is only $200 and you'll get this indicator, or you can code it yourself if you prefer. Either way works. Just open a sell position at the closing price. And it's in the people. This is for a downtrend. Set your stop loss at the topmost line. There you go. You've made another profitable trade, guys. This is a continuous pattern right here. See? What kind of pattern is forming here? A V shape. Do you see it? The yellow line, watch closely. It dips down, then crosses above the 20, and then drops again. See? This pattern appears once more. If you're not paying attention, you might miss it. And the indicator also shows a downward arrow like this, so you just sell accordingly. This one also closed successfully. Next, it happened again. How do I know? The indicator shows it clearly. There's a cross of the yellow line up and down. Just a little bit. If we just use our eyes, we might not notice it. But if we set the indicator to give an alert, it alerts us correctly. It checks the EMA price and then plots an alert for us. So here, you can trade sell according to the conditions. This is a second EMA crossover. There are so many of them. This is a very classic entry, entering when a V shape forms. Here, in a downtrend, it's a downward V. If it's an uptrend, it will be an upward V shape. See, this is an upward V shape. This comes from me observing the behavior of the 3 EMA lines. It almost never loses. You can see that the yellow line crosses up and down. When an alert like this appears, you just enter the trade right there. Place your stop loss above and set your risk-reward ratio at 1.5 times. That's it. Easy, right? This will help you understand even better. If another V forms, the yellow line must cross the white line up and down, but it must not cross the green line. See here? The green and yellow lines cross. The 5 crosses the 20, going up and then down, forming this kind of V shape. So you can open another sell position. When it drops down again, you take profit again. See that, guys? It's not difficult at all. Let's look at another example. I've done all the tests here. This part here is an uptrend. The 3 EMAs have crossed upwards, so you look for a V-shaped pattern in an uptrend. If you can't spot it, you can let the alert indicator notify you. It's the easiest way. See? When the 5 crosses the 20 and then it crosses up like this, a V shape like this has a high chance that the price will go up a lot. The win rate is almost 70%. But there are still losing trades, so you must manage your risk very carefully. Let me emphasize this technique again. Even though the system looks simple, you really have to manage your risk very well. Absolutely do not overtrade. Those who have studied with me already know this well. When you open a buy, set your stop loss at the EMA 50. And once again, we take profit smoothly. I hope everyone understands this system is very, very simple, with a good win rate and good profits. I've already backtested it for 3 years. If you're still losing money, I really don't know what to say. So make sure to check your broker and your settings carefully. The EMAs must be set to 5, 20, and 50, only like this. To summarize once more, for the EMA crossover, we do not enter on the first signal. In this case, we still do not enter. We will enter at the point where a V shape forms, or when the 5 EMA crosses below the 20 and then moves back up. Only when it forms a V like this will we enter, or what's called the second EMA crossover. Enter at the closing price, placing it at the EMA 50 like this, with an R of 1.5 times. If you optimize, you might get a higher R than I do, but I set my risk-reward ratio at about 1.5 times and have gotten pretty good results. To wrap up, a profitable strategy doesn't have to be complicated. As you've learned today, just wait for the right moment before taking action. Remember, those who know how to wait get the best entry prices and are safer than those driven by greed. Don't forget to like and share so you won't miss out on more great videos. In the next episodes, there'll be even more fun for sure. That's all for today's video. I'll take my leave now. Goodbye.